Have a good show.
Thank you.
Here we got Marson in frame. Good. Perfect. He looks perfect.
There we go. Try to keep all our domes same level.
Yeah, keep them. Exactly.
Yeah.
Not too
Mount Rushmore.
Not too shiny. All right, let's get this show on the road, gentlemen. Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined by our technicals and momentum pro Kevin Bakes Baker and our growth and small cap value pro Robert Marson. What in the heck is going on out there today? We got a down market. Did you guys see the tape? I don't know. When's the last time we saw something like this?
Insulted. The market's down.
and Trump this morning tried his best to tag it right at the open. It was just, you can't make this shit up. Anyway, it sounds like OpenAI missing numbers according to the Wall Street Journal. So there's some concern about that. I don't know, Bakes. What do you think about this this run in the SMH over the last 18 days in a row? Up 18 for the SOX SMH. What is that? It's the ETF that covers all the chip stocks.
Yeah, funny. It's funny you bring that up. I think it's extended. I thought it was extended a while ago. I thought it was extended a while ago. This is as far away from the 200-day as this gets. Come on now. Here we go.
I'm going to short some today. I'm going to short it today after we hang up, if we finish.
All right.
I was thinking about doing the same, actually, Mr. Marson.
I use a tight stop, like the 1.5% stop loss, something like that.
Yeah, you got to be in to win.
I hate my new chart service. They downgraded me and charged me for an upgrade, so I can't get the SMH. But the bottom line is, it's about as extended as it gets. I was going to bring up, but I mentioned it with Micron the other day. I just think it's similar to Netflix, which we talked about before, that it was so good it's bad, and it's a love fest, and you can't seem to have enough good news for the Broadcoms and the Microns. But here's NVIDIA joining the party. Earnings are coming up, and the last earnings report, got a Bronx cheer. Couldn't move the stock up on obliterating every line of the income statement, and is hitting new highs. But it's hitting new highs yesterday on 7% above average volume, which is anemic. Now, it's a huge company. Everybody owns it. I understand that. But the fact that new highs are not being greeted with a lot of upside volume gives me a little bit of pause. I don't know who leaked the OpenAI news. Maybe someone who was short the SMH and wanted to knock down all these stocks, CoreWeave and all the semis. But the OpenAI seems like that Anthropic is eating its lunch, and there's a lot of VCs that are up to their eyeballs in OpenAI, and clearly there's the blooms off the rose there to a certain extent.
Competition is a thing.
Big time.
Competition is a bitch.
Yeah.
All right. And Mr. Marson, with your inTEST, is probably not liking this today, although that's been on an absolute tear, right? How are you feeling about that one?
It's I've been buying semiconductor stocks for 44 years, gentlemen. And semiconductor stocks today are more, and I was buying them at half of sales and one-time sales, and now the semi-equipment stocks are 15 times sales. A good semiconductor company, like Intel or Texas Instruments, or 6 to 12 times sales. The Arteris I sold at 6 times sales, went to 13 times sales. So this is bullshit. It's when, not if, these stocks get crushed. Okay, in my opinion, unless we're in an entire new paradigm where semiconductor spending as a share of global GDP, at least doubles or triples, and because of AI and technology. If that happens, then they'll only go down a little. They won't go down. They won't go down. 50%. But I've never seen this. This puts the tech bubble to shame, and people don't understand it. The talking bubble heads on CNBC or talking knuckleheads saying, "Oh, well,
They're
things
all
are
in.
more expensive in at the tech bubble." No, these are work. The amount of companies trading over 10 times revenue, and at 20 and 30 as real businesses like ARM times revenue, way higher than 1999 and 2000. So, do it that again. Valuation is not a timing tool. Never has been. But
Nope.
when for whatever reason the semiconductor cycle turns down, because it always has been. Someone made a comment that the semiconductor industry has never had 3 years of consecutive revenue growth. Never. That's how cyclical it's been historically. So when the cycle turns down, and there's probably a shit ton of double ordering going on now for all these AI related semiconductor products
Yeah.
running, there's going to be hell to pay, even if it's a short term inventory cycle that people have to digest because they got too ahead of themselves ordering GPUs, CPUs, and memory. That's my opinion. So I would short the gun to my head. Even without a gun to my head, I'm going to short the semiconductor ETF in here.
Yeah,
And what are you doing?
You could do that.
Completely out of
there's
inTEST?
there's no sign of technical weakness at this stage of the game. So if you are making a valuation call, and yeah, you could probably scalp some downside, but there's no technical weakness yet.
Yep, I agree.
But he's definitely long the Flyers. If you didn't notice with his outfits lately.
I'm still long inTEST, and I'm still not selling any stock, even though it's had a very strong run because the peers have had similar runs. And like when we bought this, it was 0.75 times sales. The market's 3.5, over 4 if you add the debt, 4 times
Son
EV.
of a-
So it's now closer to 1.6, but the peers were 2. They're now 4. So the valuation spread of the peers are still more than double this company's EV to sales ratio. So I'm sticking with it because the companies that are in their peer group trade at even crazier valuations than they do right now.
And Robert, look at this. I mean, the breakout above 9, way back in February. So you got a double in 2 months. But look at the up volume. I mean, the up volume is dwarfing the down volume. The blue lines down here. So I mean, the trend is your friend. Yes, it's extended above the 200-day. So if you've doubled your money, yeah, maybe take half off. I know you got a sort of 25% off discipline, but I mean, this is working. Period.
Let the winners run. Let the winners run.
Yeah, I mean, you got very little resistance until the all-time high, back here at
25, 26.
$26.
Yeah, 26.
So I mean, there's another $8 coming your way, I think.
Hey, Robert, how correlated have you seen this and others in this space to the big cap names? I mean, there's so much money and headlines going towards the Intels and the Texas Instruments and the NVIDIAs and the Broadcoms and you name it. When those start to get hit, are these going to be hit as hard, or is it you're going to see some rotation into some of these smaller names instead?
It really depends upon how strong the fundamentals are and what the valuation looks like. So, yeah, if these guys put up good numbers and they're raising estimates into next year, you'll see a decline. You'll see an inline decline with the large caps, and that's because the fundamentals would be good and valuations low. Normally, these small caps trade, with a much higher beta, right? So you would see a much bigger decline for something that if they had messy numbers and or a very high valuation. So I would expect it if the S&P is down 10%, I would expect this to be down 10% in a correction, not 20 or 25 like a lot of other small cap names that I trade because my long book is balls to the wall, risk on 100% of the time. I don't buy anything unless in my growth portfolio I have a stock that could 3 or 4x, with considerable, downside risk if the fundamentals don't deliver. So yes, I would say the relative performance in a company like this, you'll see because it will only drop as much as the large caps.
Yep. Okay. All right. What else were you looking at this morning? Anything on your hit list that you wanted to talk about?
Well, for me, one of my big five energy stocks reported enterprise products. They delivered mid-single digit unit growth and revenue growth and all that, which for this company was a good outcome because they had guided to low single digit growth or flat growth. But there's a lot of energy demand from foreign sources, and these guys produce and ship a lot of LNG or natural gas, LNG. They process the gas that then gets turned into LNG in the Permian. So they sell a lot of propane. So they've picked up volumes from the Middle East problem and the volume, the closure from the Strait of Hormuz. So it's good, and they're talking positive about the rest of the year. So the pipelines and the processors are going to do fine with this. They don't have leverage to get 20% growth or 10% growth, but if they were looking at 3 or 4, they'll get 6 or 7% growth. And in their business, that's a nice outcome. So I'm happy with the number. The stock had gone up a little bit to the 52-week high recently. But so I don't expect the stock to react to this, and the valuation is fair. But the numbers do support the move in the stock. And then
what's the ticker on this one, Robert?
EPD.
The chart's up on the page.
EPD.
Enterprise Products. Yeah. Now you remember I was a buyer of the dips because the dividend yields were very high the last 2 years. So I've talked about MPLX, Plains, Energy Transfer, those kinds of names in the past. And they're all at the high end of the range, and they're all more fairly priced. So I'm not chasing, but I'm happy that the fundamentals are catching up to the stock prices. So that's a good thing. And then finally, I went ahead and bought a starter position, in that LSI Industries, which I talked about in the past. LYTS is the company that makes the lighting fixtures and the display cases and graphics for convenience stores and gas stations and stuff like that. I don't know. I was bored. I needed to buy a stock. I hadn't bought a stock in a long time. So I bought a 1% position in LYT. It's at 20 and change a week or so ago, I guess it was, so a couple of weeks ago. They reported numbers. The numbers were solid. They grew 9% organically. They made an acquisition of a company that's going to add another 40% to revenue growth. So they're going to post really strong numbers as a business going forward. And I have them making about $1.50 in the year that starts on July 1st of this year. So it's at 12. I'm paying 13.5 times earnings for a high quality. It's not the best entry point. Normally, I was waiting for that 18.5, 19 to become 15 or 16. And I just figured, well, if I buy a 1% position, I probably increase my chance of getting there. And then I could buy another 3 or 4% to make it a 5. A normal position with this would be about a 5% position. So I bought 1/5 of the stock that I want to buy. And if it goes right to 35, I'll sell it and declare victory, or 30 and move on, because at least I have something in the book. But it's a very good, relatively high quality small cap management team, product line, competitive dynamics play where they're the 800-pound gorilla in the industry, and they can offer a full suite of services and products to the big companies and scale like, before when 7-Eleven or, Wawa put up put up stores in places in different geographies. They had to deal with local mom and pops. And these
Right.
guys were becoming a national scale company that could do a national rollout for Exxon's gas stations, that kind of thing. And then they're starting to take, material market share with this new deal. It even gets them, more, vertically integrated. And I would believe that they're going to have, mid to high single digit organic revenue growth at least going forward. And in today's, stock market for a non AI related, non data center related, business, that's pretty darn good. So it's probably worth 20 times earnings. So if they could do $2 in 2 to 3 years, I could see myself having a $40 stock.
Biggs, so you're a buyer in the 15 to 18 range, it sounds like, and you're a seller north of 30. I hear that right?
That's me, yes.
Okay. Biggs, what do you look at? What do you think of the chart? Look pretty good.
No, I like it. I mean, I like the fact that
Long days.
it goes up on earnings. The people like the earnings report, and that's getting more and more rare. And I like the fact that the up volume is swamping the down volume. I hate to be so simple, but it's just worked over time. When it takes out 24.75, that's an all-time high, and you have no resistance because everybody's making money. So 35 to 40 doesn't sound like that much of a stretch.
How far back does that chart go?
This one, pardon me.
I mean, that looks like that's been pretty much dead money for a while.
3 years. 3 years?
Yeah, this is the daily, so that goes back a year. This goes back, this is the weekly, this goes back to 2020. And this goes back to, I think, 1999, 97. So
Wow.
it looks like an EKG, but now, I mean,
Working
that to
back
me,
up.
to me looks like a pennant. I can't draw it because I hate my chart service. I'm going to go to customer service after I get off this call. But again, above 24.75, I think you're rocking and rolling with everybody making money. So I think.
By the way, in 2018, there was a significant management change, and they changed the entire strategy.
Okay.
So the new management team owns the last 8-year track record, not the prior 25 added to it. Okay.
All right.
No.
That's good.
Which looks a lot. It looks a lot. They've done a lot better. Yes.
You had me at Wawa, which is a national treasure, and I miss it dearly.
We're gonna have the Einstein bars in both of those channels here
any day. Cool.
Good job.
Yeah.
I've been giving them out like you read about.
That's a big
That's
deal.
up.
I got to put another order in.
All right, Mr. Marston. Anything else you want to cover? You want to talk about your Karu or your Ceragon or your?
Nixie, did you SEMO reports tonight, so Silicon Motion. It would be better if I did Wednesday or Thursday because I could hopefully beat my chest on that one. We'll see. But did you tee up the telechart, Bakesy? So TELA Bio.
Yeah. No, what happened yesterday? Volume was up 5x.
Yeah, the stock was up, 15 or 20% on 5x volume. So there are things that could be happening there. In addition to numbers, perhaps someone knows the numbers for the March quarter. I don't know. They were supposed to be too good, so flattish, but maybe they came in better than expected. But they also have a lawsuit that against a big competitor they could settle, and this is also very easily a buyout candidate. So if people start buying this in volume, I start to think that there might be, a big surprise coming, a new surprise. So I'm going to keep my eye on it.
Is this a lottery ticket position or?
I went in at $1.25, $1.30 with a lottery ticket, and it went to $2. So it went up 50% from my cost, and then it went down to 60 cents. So it went down 50% from my cost. It went down 75% from the top. So. I didn't sell any, and I didn't buy any.
But you're sticking with it.
Well, if the balance sheet were so god freaking awful and the management's so terrible, I'd have bought more. So, by the way, I'm getting a meeting with those guys next week, so we'll see how it goes.
Oh, nice. Okay. So
they're out in Melbourne, right?
You're Melbourne, yeah. I bought a nice
local company.
I bought a nice tight sleeveless shirt, and I'm doing a lot of gym time in front of it, so I'll be a little.
Nice.
I want the
Nice.
I want the guns out for the meeting.
There you go. For the live
Don't mess with
Charmafent.
Marson.
Yeah, it's just a little trick I do.
Okay.
Okay.
All right.
All right.
All right, Mr. Bakes. Anything else you want to cover before we
Well, yeah, we talked about
Shut this
NVIDIA
down?
hitting new highs on feeble volume, and my theme of this is the Mag 7 is now the Mag 3, and Google is gathering what OpenAI spills, I think, to a certain extent. When I started this, Google was down for the day, but it's hitting new highs yesterday and today on volume that's okay. Up a little, not much, but it's I think the best chart of the artist formerly known as the Mag 7. So Google is winning. Microsoft is not, because they bet on OpenAI predominantly. And but again, the volume on the new highs is unimpressive to me at this point. So while I talked about NATO the other day, the defense companies ETF saying that the war is over, the overall market is hitting new highs, but unimpressive new highs. So I'm kind of waiting to see for upside resolution with volume confirmation, which I have not seen yet. But price is what you get paid. Here's Amazon, same thing, new highs 2 days ago, but on very low volume. So I want to see, this pick up on upside volume, and right now the jury's out. So while CNBC talks breathlessly about new highs, I'm not dazzled by the volume at this stage of the game. So and so that's why I frankly haven't done much. I'm 37% in cash, and I'm waiting for a fat pitch, and I haven't seen one yet. So, but take the new highs with a grain of salt until you see volume that gets you excited. And right now, I'm not excited.
And that's what's been tough about this rally is there's just not been an opportunity to get in. I mean, there's just been no real dips to buy. And now we got Microsoft, Amazon, Meta, Alphabet all coming out on Wednesday. We got month end, we got flows. I suspect, given the run we've had, you're going to see some rotation at equities and into bonds because of this equity run we just had. So I don't know. But all-time highs here, do you want to be sticking around for the next? Do you want to take the envelope risk going into month end and into Wednesday? I don't know.
Yeah, and maybe the earnings reports are the catalyst that bring the volume in and upside surprises. Right now, the SPY looks like it's wedging up on low volume. I don't get excited about that. So we'll talk to me on May 1st, and maybe we have a different story. But right now, I'm not buying the rally at this stage. Yeah.
I've got an observation or even a question. So I was expecting this year, the midterm year, to be a drawdown year that would have a nice drawdown, 15 to 20%. Going into the year, and I didn't see the war, so I didn't realize that would precipitate a correction. I think the correction in the S&P was 9%. And the NASDAQ and Russell were a little higher, I think double digits. So the question is, can I still expect my bigger drawdown second or third or fourth quarter? And I don't remember a year where we had a correction and then an all-time high and then another correction or bear market. So can anyone think of a calendar year where we had two corrections or a bear market and a correction leading to a bear market that in between had an all-time high in the S&P 500? And I can't think of a single one. And when I asked the Chat GPT or the Google AI, it tells me yes, but then it shows me charts and it's not what they don't understand what I mean. So it doesn't that's a pretty simple concept. Can you have two down 10% moves in a calendar year with an all-time high in between on the S&P 500? I don't remember, again, I started in 82, and I don't think we've seen that in my career. I thought 87 maybe, but the
That's what
correction
I was thinking of that. Yeah.
the correction was less than 10% down, and it wasn't an all-time high back up. It got back close, but it was still under the high from the summer.
Huh.
So if we had a double-digit decline from here to buy, a buyable dip, 10, 15%, I think it might be a first ever since 1950.
Ask your friends at
No, it-
Carson. They probably have that.
I asked him and I emailed it to
Oh
him,
no.
and he didn't answer. Yeah, I did it a private email, so but DM on this or via Twitter. But if I ask him publicly, maybe he'll address it.
Well, we got midterms coming up, and it's not looking too good for the Republicans. So maybe that's a catalyst.
That's what I assume that's what been the catalyst in the past, because you remember this is the average drawdown is 10% in the other 3 years, and this year it's like 17% in the midterm election year. The drawdown and on the election cycle in the year of the midterms is way worse and way later than the average drawdown in the 3 years of the.
Keep an eye on July 4th, the 250th anniversary. And my suspicion is that Trump is going to pull out some surprises to try to turn around the midterms in the Republicans' favor. And we'll see what happens with that. But I think July 4th is going to be fireworks in the stock market, also in the skies. So you heard it here first.
All right.
And WFC on the lawn and Formula One downtown, and he's pulling out all the stops.
There you go.
All right, gentlemen, let's wrap it up. Anything else you want to cover before we close?
Nope.
We're good. All right. Thanks for joining us, everybody. Thank you, Mr. Marson. Thank you, Kevin Bakes Baker. I'm Steve Lamar. We will be back here Monday with Berna and Mackie. WallStreetBeats.com. Have a great day.
Thank you.
See you, folks.
Okay.
Thanks, Jen.